Hello and welcome to the results overview for PNB Housing for Q4 FY19. We will look at the salient points on the company's performance in this quarter. Let us start with P&L numbers. The graph on the left side captures the revenue growth and the expense growth. Year on year, the revenue moderated to 31.1%. The growth in expense was equally moderated at 27.5%. I was looking at the revenue growth for the past 5 quarters, which is captured in the figure on the right hand side. This is the weakest growth in revenues for the past 5 quarters. Let us look at the PAT and EPS growth. The graph on the left shows the growth in PAT and the EPS growth. PAT growth was excellent at about 51%. EPS growth followed the PAT growth at about 50%. The graph on the right hand side shows the historical growth for the past 5 quarters. With respect to profit growth, this was one of the best quarters in the recent past. Let us now look at the expenses for Q4. Let us start with the finance costs. Finance cost represents the interest that the company has paid on its borrowings. There has been a growth of 39% in finance costs. Note that the revenue grew by 31%, whereas finance costs grew at a higher rate of 39%. The graph on the right hand side shows the growth in employee costs, growth in other expense as well as growth in impairments and write-off. Let us look at the rise in employee costs. There is a huge growth of 90% in the employee costs. The main reason for this rise is because the sales team of the company was part of a third-party organization and its salary was being amortized all these years. With the new accounting standards, the company has to expense the salary of these employees instead of amortizing it. With respect to impairments and write-off, there was a noticeable drop which surprised me on the positive side. Interesting to see if the confidence can be sustained for the quarters to come. The graph on the left shows the disbursement growth for Q4 with respect to Q4 of FY18. The disbursement saw a degrowth by about 2%. The graph on the right hand side shows the historical disbursement growth. A sad story indeed. Now, disbursements are not something which impact the current quarter. So if there are lower disbursements in this quarter, it will impact the revenue as well as profits for the subsequent quarters. Now moving on to cost to income, the graph on the left hand side shows the cost to income for the company. Over the years, the company has been able to bring down the cost to income. Q4 of FY19 saw an increase in cost to income. This should be due to the integration of sales force of the employee, which increased the headcount as well as the cost for the company. The graph on the right hand side shows the return on equity for the company. Q4 has seen a sudden spike in ROE. I'm not sure of the reason for this though. PNB Housing is planning to raise Tier 2 capital followed by Tier 1. So once the Tier 1 capital is raised, we will see a drop in ROE. Now the graph on the left hand side shows the borrowing profile for the company over the past few years. There are quite a lot of towers over there. I would like to point out to 3 interesting trends. The first trend is deposits. As a percentage of total borrowings, deposits are decreasing, which is disappointing. The bank term loans as a percentage of borrowing profile is increasing, which is again disappointing. The company is resorting to higher percentage of assignments, which means it is selling off its loan assets to other banks and financial institutions and earning the fee or commission from these transactions, which is again disappointing. The entire borrowing profile of the company seems exactly opposite of what should it be doing. I really don't know what's happening here. The graph on the right hand side shows the Tier 1 capital adequacy ratio. Post the IPO, the Tier 1 capital has been decreasing slowly. The mandatory requirement for HFC for Tier 1 capital is about 6%. There is enough room for the company. But the management is planning to come with a follow-on offer to raise money. This again will be EPS dilutive as well as impact the ROE. Now moving on to the NPA numbers, the graph shows the non-performing assets and the net non-performing assets. The NPAs have remained more or less stable, which is a good sign. For the first time, management talked about the stress in corporate loan book. They are seeing some stress in 5 projects, close to about 900 crores worth of money, which the company feels is under stress. Then these are not NPAs yet though. The management has appointed dedicated teams to tackle the issue, and it hopes to see resolution for these projects. Let's wrap it up with a quick summary. The revenue growth was pretty good. PAT and EPS growth was excellent for this quarter. Disbursements was clearly disappointing. Generally, a drop in disbursements will impact the revenue and profits of the upcoming quarters. I'm expecting FY20 to be a very slow quarter and the entire year as well. NPAs remained more or less stable. The drop in provisioning was a very positive sign for me. I hope the company can maintain these NPA levels and provisionings. Overall, this was a decent quarter, but very challenging one though, with some red flags that we will discuss on our website in the extended analysis of the company. This was an abridged version of the results analysis for PNB Housing, wherein we tried to look at the key numbers. For a detailed analysis on PNB Housing, please visit investing.amitkirti.com. Thanks for listening.